Hi, folks. I'm glad to say I'm joined by my colleagues Dave Lewin and Michael Corrente from our firm in the US, CBIZ. Dave is the accounting and advisory lead for CBIZ, and Michael, tax. Dave, Mike, do you want to just give us a quick intro to the two of you and your respective practices?
Sure. Good morning, everyone. I'm Dave Lewin, and I run the accounting advisory practice here at CBIZ. We help clients outsource or co-source any and all accounting-related issues and financial reporting issues or items that would flow through a traditional CFO or controller's office and group, all the way from really basic bookkeeping to highly technical accounting matters, as well as initial accounting setup for clients here in the US.
Hi, everyone,
Great.
and I'm Michael Corrente. I head up CBIZ's Boston tax practice, and we help clients both from a corporate standpoint as well as an individual standpoint with all of their compliance needs, as well as doing planning. And the planning may include doing international planning as well as domestic planning here in the US from a corporate standpoint and from an individual standpoint, helping them both from an international standpoint as well as also helping them from an estate planning and gifting standpoint. So we take care of all of the different tax needs that a taxpayer would have.
Brilliant. Well, highly relevant to this video cast around doing business in the USA. They seem like highly relevant services in that context. So, guys, Dave, I'll turn to you first, if I may. Tell us about doing business in the USA. Is it a good market to exploit? Are you still seeing interest from overseas company looking to get into the US, and should they consider it?
So we are definitely seeing a high level of interest, especially in the New England area with the robust biotech and high tech industries. Companies from around the globe, as well as domestically, are setting up shop, raising capital, and really trying to launch their initial ideas and plans here, as well as established companies looking to expand. So the industry is hot. There's a lot of activity, so we are definitely seeing a high level of interest. And Mike can comment as well.
Yeah, from a tax standpoint, we're definitely seeing a lot of interest. I mean, one of the reasons that we are seeing interest is when tax reform came into the law at the end of 2007, beginning of 2018, corporate tax rates here in the US from a federal standpoint went down to 21%, which is a lower rate. It's not as low as the UK, but it is a low rate compared to a number of countries around the world. And as a result, a number of companies are looking to the US to be a place to house their IP, just because of the fact that it helps them exploit the North American market. There's
Mm,
also, some great incentives here with the R&D credit. And then another thing that's also helpful for companies is, the markets that are here. We've had a number of companies, even UK companies, over the last year that wanted to do an initial public offering, and they actually used the US stock exchanges to do those public offerings because they thought it would be better to help them from an equity raise standpoint.
yeah, and I think the US stock markets and US investors seem to be much more open to the risk reward dynamic, and I think we probably see that playing through in the volume of capital that goes through US stock markets, and actually the performance of the Dow Jones and the S&P 500, and particularly the Nasdaq in the last 12 months. Uh, on the subject of investment, is the USA open for business? Does it gladly attract inward investment from UK businesses, or would it rather foster its own businesses? What's the mood music like in the US at the moment, would you say?
Yeah, from a tax standpoint, they're definitely interested in having multinational companies invest in the US market. It helps them grow the business here in the US, as well as makes it, more worldwide type of place to be doing business. So, we have a number of companies, we'll call them inbound companies that,
Yep.
may
Yep.
have foreign parents. A lot of them have UK parents that, they're using the US as their North American hub, and maybe having a dual principal structure, but the US is part of, their overall strategy in order to grow the business, worldwide.
Okay. from a UK standpoint, you've got a UK business that's clearly used to working up accounts and tax, doing its own compliance. In the UK, a company has to prep its statutory accounts. It files them with Companies House. It then takes those same accounts, bolts on a corporation tax computation, and fires that off to HMRC, Her Majesty's Revenue and Customs. I think it's slightly different in the US. Can you just touch on how the accounting compliance and the corporate compliance works in the US?
Sure. So I'll take it from a tax standpoint, and Dave can jump in from an accounting standpoint as he sees fit, or as I go off track there when I'm talking about accounting. But from a tax standpoint, we do not need to file the statutory accounts with the returns. So when we file the returns with the IRS or with the state authorities, we just file the tax returns. However, we do need good statutory books, and that's where Dave's team will come in and convert, the books that we may get that may either be in IFRS or UK GAAP, and convert them to US GAAP, so then we can use those books and records to prepare the US tax returns. But different from the UK, we do not need to file those books and records with the tax authorities here in the States. We just file the tax returns with the tax authorities.
Tax
Yeah,
return.
from
And
a
sorry,
sorry.
Dave. Yeah, carry on.
I was just going to say, from a financial reporting standpoint, you have to look at it in a couple of ways. So if a UK company sets up shop here and they have US investors, and those US investors want to see, US GAAP financial statements, you've got to go through that exercise of determining what the differences are and converting the books. Most of our clients that set up shop in the US, the local books here in the States are actually kept in US GAAP, and then there's a conversion done by the parent company, back in the UK to UK GAAP. So that way we have what we need here. It works for anything we need here. And then if material, the parent company is doing a conversion back overseas, we could,
Sure.
we could help clients, with IFRS, here, and then convert to US GAAP when you need to, but it's usually the other way around. And then obviously for companies that want to IPO, in general, companies are IPOing under US GAAP. Some are foreign filers and are able to use their local GAAP. But for the most part, if they get to that phase, it's all under US GAAP.
And I'm just thinking about the smaller, maybe tech companies, smaller end of the market looking to set up in the US. What are they going to have to prepare for them? Is it just a case of simple US GAAP accounts to support the tax compliance?
Yeah, so we'll keep the books under basically an accrual basis of accounting locally, again, assuming no IPO at this point, and we would provide those financial statements to the tax team, and the tax team would take them and file the respective returns. There's no requirement to take the US GAAP financial statements and file them anywhere else. It's just, they're used for the tax returns. And then, if companies are lending locally in the US, then maybe they'll be required to get an audit, in which case you'd have full-blown financial statements that are required to be provided to the bank. But in general, again, for most of our referral clients, the lending activity is managed at corporate.
Hmm.
At
Excuse
least
me.
the ones we've seen.
And the amount of information that's in the public domain in the UK, there's a set of accounts that's filed with Companies House, and that's accessible to all. Is it slightly different in the US in that the smaller accounts aren't in the public domain?
Yeah,
Correct.
if you're not public, the public doesn't get it. So if you're not a publicly
Right.
traded company, or you're not a not-for-profit, if you're a not-for-profit, that stuff is out there, but otherwise it's private, and that information is not floating around.
Which
Correct.
is an attraction in a way,
Yeah.
because it's yeah, yeah. Okay. Uh, Another contrast in the UK. The UK, we have I wouldn't call it a simple tax system, but we have one type of tax on business profits, which is the UK rate of corporate tax, which is currently 19%, but going up to 25%. In the US, it's slightly more complex picture because you have federal taxes, state taxes. What are the differences that UK investors need to look for when they set up a business in the UK compared to what
So
they're used to in the UK?
yeah, so currently there's only one tax rate, federal tax rate in the US, which is 21%. There's talk of that going up to 28% under the new administration, although that may get closer to the 25% rate that the UK just passed.
Yep.
But then depending on which state you're doing business in, each state has its own tax rate that's in addition to the 21% that you're paying from a federal standpoint. So you need to take into account what the different states that you're going to be doing business in, what are their tax rates? And then if you're doing business in multiple states, you need to apportion that income to the various states that you're doing business. Now, generally, the way you would apportion that income is based on property sales and payroll in those states compared to property, payroll, and sales everywhere. Although now with the technology and a lot of businesses doing business online, there's a new economic nexus type of theory in how to apportion that income to the various states. But for example, if you're doing business, let's say in Massachusetts and New York, as well as federally, you would have, let's say it's 50% in Massachusetts and 50% in New York. You would have a 21% rate. Then you'd have 50% of the Massachusetts rate of 8%. So that's another 4%. And then you would have 50% of the New York rate, which is a little over 8%. So let's call that another 4%. So you'd be around 29% of effective tax rate in the US.
And is there any relief for the state tax against the federal tax, or is it definitely a double tax?
No, there is relief. So you can deduct the state tax against your federal taxable income. So, making it easy, I said it was about 29%, but you would get a benefit that would bring that, that effective rate down to under 28% because of the fact that you'd be able to deduct the state taxes on your federal return.
Okay. And you touched there on selling into multiple states. Is that a complexity that is going to put many businesses off doing business in the US because you've got that dynamic of having to be compliant in a number of jurisdictions, or are there solutions to that?
There are solutions. I mean, there are a lot of businesses, as you know, right, aren't used to doing businesses in multiple states where you need to do all the state filings. But it's something here we're familiar with, where we do it all the time. We have companies that are filing in multiple states all the time. So we can advise clients on what's the best way to do that, what creates what we call nexus here in the States, and which is enough contacts that you need to file in those different states. And we can advise clients, why it might be beneficial to create nexus, or why you might want to, do some other type of planning to minimize the amount of apportionment and nexus you have in those states, so it minimizes the filings or the income you have in those states.
Gotcha.
And just to add to what Michael was saying, when we think about and when we go in and help companies get set up initially, one of the things we make sure we do is, understand what types of products are they selling, what types of services are they selling, where are they selling it, in making sure that the information is appropriately set up in the accounting system so that when it comes time to filing the tax returns, it's not a mad scramble to figure all this out at the end of the year or the end of a period when you have to file state taxes. It's set up in a manner where the information can be easily extracted, provided to to Mike and his team, and then, assist clients with getting the filings done in the appropriate states.
And so location is clearly relevant. If we've got a UK business looking to set up and exploit the US market, but they are location agnostic, are there any states where it's better to set up that initial company than others? Is that relevant? Is that a consideration?
There's a number of different factors that go into that. I mean, the tax rate and the tax regime is definitely a factor, but also it's making sure you got the right resources in order to run your business. That, we see a lot of the tech companies set up either in Massachusetts because of the different educational, as well as, the different institutional resources that we have here. Same thing in California. You'll see a lot of the tech sector in California because of the educational facilities, the colleges and universities, as well as, if it's biotech, the hospitals and other healthcare facilities there that they can get the resources for. But again, there are some states, there's a handful of states that don't have corporate income tax from a state perspective. So you just have a federal tax rate. So again, it depends on the business and what you're trying to do. So taxes and the tax rate do become a factor, but there's a lot of other factors in running the business that may make it, more beneficial to be in Massachusetts at an 8% corporate rate, as opposed to being in Florida that doesn't have any corporate tax rates because they may not have the right resources in order to run that business. So again, it's making sure that, as Dave said earlier, we understand what the business is selling, what types of services it's providing, what types of different products it may be selling, so that we can help advise on the best way to set up your business and where's the best place to set your business up.
Okay. Okay. And I know Delaware is often touted as the place to set up. What's the attraction to Delaware, or is that a myth and people set up there and it's not actually the best place to be?
So that's from an incorporation standpoint, more from a legal standpoint than from a tax or an accounting standpoint. So Delaware corporate laws are very friendly to corporations, and that's why a lot of companies will form their businesses as a Delaware company. But just because they're formed as a Delaware company, it doesn't mean that that's where they're actually performing the services. We have a lot of companies that are formed in Delaware and Delaware Incorporated, but their headquarters are actually here in Massachusetts, or they're actually in New York or someplace else. And again, it's more from a legal perspective than from a tax or accounting perspective.
Great. And we've already started hinting at some practical tips for UK businesses or overseas businesses looking to set up in the US. What other top tips would you give to a business looking to set up in the US for the first time? What are the top do's and don'ts, would you say?
Yeah, so from a tax perspective, one of the things we're definitely going to want to look at is as we talked about many times, right? Understanding what the business is doing, understanding, the services that they may be providing, or the products that they may be selling, because we want to make sure if they're, doing business in with the US market, but they're also doing business with their UK parent, they have the right transfer pricing study in place. And transfer pricing is very important, both from a UK and a US perspective. The tax
Of course.
authorities in both countries are very aggressive on transfer pricing. They want to make sure the right profit's in the right jurisdiction. So we work with companies all the time to make sure that that's being done right. And for us to understand the business that's being done in the US will help us set the correct transfer pricing. The other thing is, as we talked about earlier, where you're doing business from a state perspective, making sure that you're doing the right filings, you have the right information from a state perspective, so that you understand what the concerns are from a state perspective. And then, lastly, as we talked about earlier, there's a number of different incentives that are out there. The research and development tax credit, both from a federal and a state perspective, very important and can be very beneficial. Here in Massachusetts, if you're a life science company, there's a life science incentive that we can help, our clients, be able to get and be able to profit from. So again, there's a number of different things that we can advise companies as they're doing business in the US,
Sure.
because again, coming from a foreign country, the UK or wherever it might be, it's a different tax regime, and we want to make sure that they have a full understanding, but we can help you with the do's and don'ts.
Brilliant.
And then
Dave,
from
what sort of practical tips would you offer, and what sort of mistakes do you see companies making when they come to the US for the first time?
Sure. So I think the number one thing is don't wait to set up your infrastructure, even if it's super simple. So 99% of the smaller startup biotech, high tech companies that are coming over have no employees in the US, don't have, or maybe not even have any consultants lined up in the US. So getting a consultant lined up to help establish an accounting and financial infrastructure. So whether it's as simple as setting up a QuickBooks account, or if it's a little more robust using, a NetSuite or something like that. So you've got your accounting infrastructure and can start accounting for items right out of the gate versus doing a lot of stuff manually and or kind of not with any routine and then playing catch up for 6 to 7 months, which can have an adverse impact on the taxes if decisions are made or transactions are executed that could have been done in a different manner that could lead to a
Mhm.
different, tax output, if you will. And then, as these companies look to either hire folks in the US and or transition consultants to employees, right? Making sure that that's done right so that payroll taxes and all those things are initiated correctly, because there can be, penalties and adverse consequences if that isn't done right.
Okay.
And then it's a matter of just building on that versus playing catch up after 6, 12, 8 months if everything's been kind of done haphazardly or manually.
And just to add on, I mean, Dave talked about whether it's employees or consultants, there's a different taxing regime, well, I'll call it, on how employees get taxed versus how a consultant gets taxed. And there's different Internal Revenue Code requirements to determine whether someone's an employee or a consultant. So again, it's making sure that that's done correctly up front.
Mm.
So the companies that are just starting to do business here in the States, don't run afoul of those rules and get caught up into some penalties and filing requirements that they weren't aware of.
Yeah, that makes a lot of sense. They're setting up in the US because the US is a large market. It's giving access to potentially huge revenues. Where are you seeing businesses go to get the marketing and business development support to help crack the US market?
Hmm. That's a
So,
good question.
yeah, that's a really good question. So, I mean, they're going to a number of different places. They're dealing with, their accounting and legal advisors in order to help them determine what's the best market that they should be starting up in. There's a number of different places where you can get marketing support to help determine, what you need from a marketing standpoint to get your name out there in the US market. And that can be anywhere, especially in today's world with result of the pandemic where everyone's remote. We could have different people in different markets all working together on the same team.
Yeah,
Right.
there's lots of like boutique, smaller boutique marketing firms all the way to the large multinational marketing firms, just like there is on the accounting side. And then depending on, a lot of our smaller clients, maybe not necessarily from the UK, but are private equity or venture capital backed. And those firms tend to have tons of connections in the industries that they typically invest in. So reaching out to these companies, investors, and figuring out if they've got the right relationships from a marketing perspective is big.
Well, we've talked about accessing marketing. We've talked about accessing investment at the top of this call. What about know-how and intellectual property? Is the US a good place for a business as it's looking to grow its own know-how? Is this stuff that they could tap into in the US to help accelerate their growth?
Yeah, in the past, one of the tax kind of strategies that we used to have before tax reform and the reduction of the tax rate was, you know, moving the IP offshore to, maybe the UK because of the patent box kind of regime they had there, or maybe to Ireland because of the 12.5% corporate rate. But now that the US rate has come down to 21%, it actually is a very favorable country to house your IP, especially to exploit the North American market, as well as the fact that we do have the research and development tax credit that we can utilize to bring down your tax rate here in the States. But again, it's something that is always changing as the rates around the world are changing, as the rates here potentially are changing. Again, there is some benefit to maybe moving your IP to Bermuda where there's a 0% rate and then trying to exploit, the foreign markets that way. But the US is right now with the 21% rate, one of the favorable companies to house your IPs, especially from a North American perspective.
Sure. And Dave, do you see overseas companies coming to the US in terms of an IP strategy, not so much from a tax perspective, but from they can actually tap into know-how and technical resource in the US that might not be available elsewhere in the world?
Yeah, and I think it's industry specific. So here again in New England, there is so much activity in the biotech space that lots of companies from around the globe, this is where they want to set up. Both New England and the West Coast out in California, Silicon Valley, from a high tech perspective, again, the intellectual resources, the number of firms that specialize in helping companies like this grow. I think we definitely do see that regionally for sure.
Brilliant. So, just to close out, overseas companies looking to exploit the US market, they're going to want us. They're going to want simplicity. They're going to want a one-stop shop to try and really help them bootstrap their operation in the US. To what extent can you guys be that one-stop shop for them?
So it's a great question, and so CBIZ here in the U.S. Really provides our clients with a one-stop shop. So as you've heard from this conversation, my group focuses on Office of the Controller, Office of the CFO, kind of all of that financial reporting, future audit readiness, potentially IPO readiness, flowing through my group. Mike and the tax team, both from a compliance standpoint, as well as the tax provision and the financial statements and everything else tax, right? We can provide our clients with that help. Then the firm here in the U.S. has a very large transaction services group. So we help companies with buy side and sell side due diligence. So as companies come here and look to grow and expand and potentially buy other companies, we assist those companies in looking at prospects, or if they're looking to divest of a piece of their business, helping companies maximize the dollar amount from a divestiture standpoint. We also have a huge insurance, payroll, and benefits 3 divisions. So on the insurance side, our clients can get anything from the employee related insurance to product and liability insurance, property and casualty insurance. So we help companies right out of the gate, lining up the right level of insurance. The employee benefits groups that we have help as clients grow, as you can imagine, right? If you have 1 or 2 employees, your benefits offering is probably not that big. But as you look to expand and you want to actually attract good people to come, you need good benefit packages. So we have a division that helps clients think through all of the options and helps, from a short and long-term strategy standpoint, how to give the options to the employees that are really going to drive, kind of initial attraction all the way to as these companies get bigger, to what they need to have to stay competitive. So we offer that service as well. And then lastly, among others, we actually have a payroll company. So some of our clients use ADP, which everybody's probably familiar with, but we actually have a payroll solution so we can help small companies or large companies process their weekly and biweekly payroll. So we have so many avenues that we can help our clients. And then Mike and I, as well as others, have lots of relationships outside of the company. So when these small or new companies from the UK and elsewhere come and they need a law firm, we have a plethora of law firms that we can refer them to, if you will.
Sure. Brilliant.
Yeah.
Gentlemen, thank you very much. That's been very, very interesting, fascinating, and it sounds like you guys have got the key to unlock the opportunities that are in the US market. So
We try.
thank
We
you.
try.
Thank you very much.
Thank you.